Turan. Thanks a lot. Yes, dear guests, now I would like to invite Mr. Hakan Aran, the CEO of İşbank, to deliver his speech.
Değerli konuklar,
distinguished guests, I salute you all with my most heartfelt emotions. It has been quite a remarkable opening ceremony, and I hope that this pace will continue, and I hope that we will have horizon enlarging outcomes, disseminating capital to a broader base, and as a country having a long-term sustainable and transformational efforts are so important, and this requires deep discussions, not just as a country, but as the entire world. We have been witnessing and experiencing challenging times. COVID-19 pandemic brought about inflation, rising food prices, energy prices, increasing threats, risks, and in parallel, rapidly developing technology and our labor force and its education level that tries to keep up with the advances in technology, but the fact that employment is not advancing on a balance. These all show us that we still continue to fight against all those advances and developments, and all stakeholders bear great responsibilities. So under these circumstances, all the gains of capital markets are quite valuable. If these levels or positions were achieved under regular conditions, then they would be just fine. But the fact that we have been challenged by quite some time, and the fact that the number of investors increased to 2.4 from 1 million, and the trading volume that was 3.4 trillion, and that figure rising to 13.2 show us that we will see many record highs. And the fact that we have witnessed 46 IPOs worth of $19.6 billion, and the fact that we are greatly valued, and the fact that we received $1.4 billion worth of investments to 206 enterprises, show us a brighter future is ahead. But is it enough? No, because we know that we can do a lot better, and the road ahead of us is quite long. As of now, our citizens are benefiting from their savings, and 78% of them goes to futures, and the investor profile is not where it is supposed to be today. The value of our exchange and its ratio to GDP puts us in a 5th ranking globally. Our IPO listed companies make us rank 27, and looking at the top 500 companies, only 5 of them are traded. Only 26 of them have borrowing issuances. Only 7 of them have had an international issuance. So like I said, we still have a long road ahead of us to walk. But okay, these figures are insufficient, but looking at the reasons why, we see that there are both historic and current reasons. And the most important reason is that volatility in our exchange is high, and it's not just something temporary, but it is something permanent. So risk avoiding investors are refraining from our shares. And for some time, the reason why we couldn't surpass 1 million investors was that, but now we broke it and the number is 2.4 million, but it's of course all up to the performance of our exchange, and it's up to the fact that the volatility is foreseeable. If we can have a foreseeable and predictable volatile exchange, then we can attract a lot more investors. And the industrial indexes and exchange indexes don't have strong links. The link is pretty weak. So the monthly changes between those indexes show us that our exchange is not up to production, but it's also up to price expectations. So that is why we need some combined indices to focus and to test our position. We focused on PPIs and industrial price indexes to have a combined index, a compound index, but the link was 0.10. Then after the combined indices, we saw the ratio climbed to 0.42 or to 0.30, but it's not enough. So the exchange and the production and the industrial expectations should go hand in hand. They have to be parallel so that we can meet the expectations of our investors, and so that they can act bravely. And another obstacle in front of us is the shortcomings in our savings. Once 23.5% was the percent of our savings, but now it dropped to 10.9%. And this is yet another issue that needs to be tackled with. We have to increase our savings, but how can we increase our savings? Well, looking at our household income and household borrowing show us that its share in GDP is 16.6%, and comparing it with developed countries, well, it's quite reasonable, because when we look at developed world, we see 30 or 60%, but us standing with 16.6%, that's quite an advantage. But the household borrowing and its share in disposable income, well, the level is not really great, and this acts as a barrier to support the household to save more. So the household needs more dispensable income so that we can increase our savings. And the household borrowing has been increasing, especially between the age 18 to 32. The borrowing increased by 56%, which shall be monitored closely. Another indicator is the total factor efficiency. As you know, this is applied to the industry and to all companies. That means the technology and the efficiency increase apart from all other turnovers or profitability. We cannot increase our total efficiency for quite some time now. And after the 2009 crisis, we still haven't recovered from that crisis, and we still haven't reached to those pre-crisis levels. And I believe that this is yet another challenging obstacle. So these are all of our structural issues. But if we want to increase our savings and make the most out of it in great domains, we have to increase our activities and our efficiency in our activities. If we can increase our savings and allocate it to better platforms, then I believe the interest on our exchanges will increase, and especially the interest in certificates of stock will increase as well. But I mean, we face a lot of challenges, but which one should we control first? Well, looking at inflation and bringing it to single-digit figures will help us tackle with our structural problems, but that's not all. If the inflation is high, if the environment is inflationist, then you will see that the wages will decrease, inequalities will increase, but also ambiguity, uncertainty will also increase, which makes the investors lose their appetite and flee away from our countries. So first and foremost, we have to focus on inflation, just like we have to focus on interest rates. But if you want to correct all the other problems, then you have to correct your inflation, and you have to set the right expectations for inflation so that you can move ahead. And I'm just mentioned interest rates, but significantly we have to focus on real rates. We are around -4% in real rates, but I believe we are on a good track. Interest rates are also interest rates are quite dominant in terms of employment, in terms of production. It creates employment loss, and it creates also income injustice. And the real interest rate hikes also makes the investors lose their appetites. Yes, we need low interest rates, but they have to be low in parallel to inflation. If inflation is high but interest rates are low, then this will not bring us any desired outcome. So as public finance, what needs to be focused on is focused on. I am so confident in saying that as we establish current account balance, as we bring the public borrowing to reasonable levels, as we try to have a current account surplus, of course, these will have a controlling effect on inflation and on exchange. So we have to be patient with our stance. We have to both bring inflation expectations low, and yes, sometimes we try to hurry up, and sometimes we prioritize the wrong thing, and it's sometimes make us lose our control on the inflation. But if we want to strengthen our capital capabilities, then we have to bring both the inflation and the interest rates down. Another thing is women empowerment and their participation in the labor force. I believe that women's participation in labor force will, of course, have a positive contribution to capital markets, because if women are entrepreneurs, if women are there present, well, then their savings habits are different. Women have the habit to save more and to invest more. And in this respect, we have to support women. We have to support women entrepreneurs. And this is as important as having predictability. And if we can become successful in this, then I believe our capital markets will offer great opportunities to our industrials. No current account deficit require us to increase our savings, and we have to set the proper climate to make it happen, so that the savings can first reach to exchanges and then to different channels, and we have to disseminate capital to a broader base. We have to produce, sell it domestically and internationally, and we have to increase our all capabilities to develop fully, to benefit the most from the development. And I believe that these are all important issues. If you're not producing, then how will you consume? And if you are importing, then how can you consume by borrowing? A financing model that is only settled on banking system would translate into current account deficits. So business as usual won't make us reach our targets. So if we want to change all of this, then we have to take the necessary steps. But if we remain cautious and patient, then we will have a 5% growth without any current account deficit. If next year, by the end of 2022, if we want to target a 5% growth without any CAD, then this will be the first fruit of our transformational steps, and it will be a great present to all of us on the centennial of our establishment of Republic. And as this country, I believe that we are worthy of it. We deserve such outcomes. But what we have to do is to remain patient and continue insist on doing what we know is correct. Artificial intelligence is all around us in our daily lives, so we can benefit from it in our exchanges, in our transactions as well. We can benefit from it with smart contracts in an environment that everything is digital. Then we have to keep up with the pace of technology. But if you want to keep up, then we have to assess our education policies, and we have to make sure that they are parallel to the pace of technology, so that we can fill our gaps, so that we can increase technological literacy, which will all benefit our capital markets. So with such sentiments in mind, as I end my remarks, I once again wish a great Congress, and I hope that the outcomes of this Congress will benefit us in our endeavors. Thank you so much.